I'm Michael Fox, and this is the Prospector News Podcast. And I am joined by Jeff Clark, the Gold Advisor. Welcome, Jeff.
Hey, Michael, it's great to be back with you. Thanks for having me.
Yeah, not a problem. I'm joking. We were joking off mic here, but we were in Vancouver together a couple of weeks ago. It was the start of investor conference season, and the two of us were so busy. We were supposed to record this in Vancouver, and we weren't actually able to get ourselves in the same space at the same time to be able to do this.
That's right. I remember that. Yeah, we couldn't had a hard time connecting up. But I mean, that's such a productive conference. There's so much going on, and it was great. It was very useful for me.
Yeah, me too. I'm finding that there are, as each conference goes by, there's a pocket of interest in the resource stocks, and the pocket's getting slightly bigger each time. So it's like somebody slowly blowing air into a balloon. It's not enough to make it pop or enough to move the markets, but it's something. How are you finding things out there, Jeff?
Yeah, that's actually a good analogy. There's some air going into the markets, but it's still very low. Volume on the venture exchange is still near record lows. I think it was December of last year where it was the lowest on record trading volume on the venture exchange. And I think January was no better. Well, yeah, I doubt, February is all that much better, but there's been some movement, but boy, we got a long way to go. And when the air really starts coming into the balloon, boy, look out! It'll get fun for us.
Yeah, no, I agree. Yeah, most of February has been lackluster as far as volumes go, with the exception of the one Wednesday 2 weeks ago when the GDX and the SIL and the junior versions of those did a rebalancing. So there was a lot of shares moved around during that rebalancing for about a day, and then so there was a big spike in volume and then nothing again.
Right, and a lot of companies were booted out, and a lot of companies got added in. So there were some good and some bad for depending on which company you were with. But yeah, other than that, you're right. There hasn't been much excitement or much attention, much volume or anything.
No, and I'm Mickey Phelps' sidekick on his weekly market recap. And every time we get to the TSX venture, it's just like, yeah, it's almost like we should just glaze over and skip it. There's been so little action and activity there. It's almost like a broken market.
Yeah, almost, yeah. But boy, if you look at, I mean, take any index and ratio it up to gold and all these, it doesn't matter what index it is, the mining stocks are so dramatically undersold relative to the gold price. In fact, they're all historic lows. GDX is near historic low, HEY, all these minor indexes. Same with silver. It's as bad or worse. So, I have to be honest though, I've been focusing on, instead of lamenting about that, I've been trying to really focus on what opportunities that I want to get exposed to right now before this changes. And I don't think it changes until the Fed actually does lower interest rates. I don't know what you think about that, but I don't think we get a lot of movement until that takes place. And by then, we could be off to the races. And if you don't have what you want, you're not going to get as good a price. And we could see some easy gainers at that point in our mining stock portfolio.
Yeah, everybody I talked to on the analyst side of the business all seemed to come to the same conclusion, that there's this imaginary guy standing at the starting line with the starter's pistol, and he's like toying with you when he's going to fire it. And I'm of the same opinion. I had a conversation with somebody earlier this week, again, and it was an off mic deal, and I said, it could happen over the summer months and nobody notices until they go back to work after Labor Day. And you could have,
Mm,
2 or 3 months worth of gains and look and go, oh crap, did I miss this?
yeah, maybe so. Yeah. And you know what, Michael, I hate that we have to look to the Fed to determine when the gold market is going to turn around. I hate that. It shouldn't be relying on the Fed. But that's how most of Wall Street and Main Street view this. And I just think it's a reality right now we have to deal with. And until that actually takes place, when they've decided to actually cut rates, I do think we'll be off to the races. I just don't like that that's the catalyst in the near term.
No, but at the same time, the gold price is at record highs. So
Hmm.
it's just not, as be Southern here, that gravy ain't spilling over onto my taters yet. But if you're, invested in some of the majors like Barrick, for the first time in decades, they're actually paying dividends because they've got so much extra cash kicking around. Did you stick around Vancouver for Roundup as well? Were you at Roundup or just the investor
No,
shows?
that's a little more technical, so that's a little less up my alley as an analyst. But boy, I sure liked MIF, the Metals Investors Forum, this year, and I'll be there at the one in March in Toronto, and back again in Vancouver in May. I've already made those arrangements, but I sure like that conference. Th these are two different conferences, right? They have different uh, strategies or different audiences or different ways they carry out the conference. But I like them both. They were both very productive.
Yeah.
The MIF one it's smaller, so it's a little more intimate, and it's fewer companies. You're not so overwhelmed. So it's a great way for, I think, a retail investor to kind of get their feet wet and dive in a little bit more into these stocks and talk to the CEOs, talk to analysts and the newsletter writers. And the great thing is, a company can't be invited, as your audience probably knows, but a company can't attend the MIF conference unless they're invited. So it's very different than these big ones like, VRIC and PDAC and all that where just anybody just pay the fee and show up. Whereas this, you're getting some pre-screening at a MIF conference. I kind of like that.
Yeah, I've always been a big fan of the way they've set that conference up. But the point I was going to make about the roundup was we were talking about Barrick and some of the majors. They had their geos out scouting through the core shacks. And, yeah, it's a technical geological show, but the geos that I was talking to said that they were having conversations with, majors, geos who were just kind of circulating the show looking for opportunities. So I think that there's some
Yeah.
priming for some M&A activity starting to creep back in here again in the short term, if that's the case.
That's a very good point, and I'm glad you made it because I've heard similar things about other companies at either other conferences or just signing NDAs and going for site visits and things like that. So I think things are gelling. I've heard that in the lithium market as well. Even though the lithium price has crashed, that hasn't changed the reality of there not being enough lithium for these auto manufacturers. So I've heard similar things, so it's very interesting. Some things gelling behind the scenes, huh?
Yeah, like I see across different ways that there's tailwinds starting to come into the marketplace. And if we circle back to MIF's a good um, barometer because it is such a small show. It's a boutique show. When I used to live in Vancouver, I'd be at MIF, 3 or 4 times a year. And I would always have, similar conversations with the same people year after year after year. I
Yeah.
noticed a couple of things this time around. The crowd was bigger. there were a
Uh-huh.
lot of new faces in that crowd that I hadn't seen from year to year to year to year. And I'll have to preface this, because most of our investors tend to be older, in their 50s and older in this sector. So when I'm saying younger investors, I'm talking about people in their 30s and 40s. But I also
Mm-hmm.
noticed there was an awful lot of younger investors at this MIF event this year as compared to past years as well. So as I say, all of these I think are good signs of health. Like, I've been in this market when the prices have been this depressed. And if you fired a cannon down VRIX Isles, the only thing you would have hit is, one miner talking to another. There wasn't an investor anywhere to be found.
Yeah, that's very true. Yes.
So,
Yeah.
as I say, that's kind of my take on it, and it sounds like you're in somewhat of an agreement on it. So,
Yeah, you know what? I found it to be engaging. It was full, it was crowded. The room, I didn't attend every talk, but when I was speaking, I noticed it was standing room only, and it's not the biggest room in the world, but it's fit maybe 200 people in there, and it was very full. So, um, I think those of us that are investing now in new opportunities, I think we're going to be very happy in a year or two. So, it's because of what you're saying. There's some things gelling behind the scenes in the market that are very bullish, that are very compelling.
yeah. So in that look forward, and you've been like me, you've been out there kind of scouting around for companies and stories without mentioning specific companies, because we don't want to be gathered here to giving investment advice, because we're not allowed to. But what types of opportunities are you looking, and what kind of opportunities are is it that you're finding out in the marketplace without being company specific?
Well, I'm definitely focused on gold. I think gold's gonna probably move first. Silver will get there, but it'll follow, it'll trail, and it'll catch up later. So, I think if gold moves in the summer, like you're guessing, that silver could move by the end of the year or maybe the first of next year. Um, so I'm really focused on gold opportunities right now. And I am looking, further down the ladder. I'm not interested in producers and things like that. I'm looking at maybe pre-producers, but primarily at junior mining stocks that are looking to make a discovery or a significant advancement of a deposit. And then, I'm looking at copper more and more. The big bad scare of the recession. We could still get a hard landing. We still get a stock market crash, but uh, that usually doesn't happen in election years. Not knock on wood, but the trend is that stocks tend to rise during election years, general stocks. So I am looking at copper and lithium, and again the same thing, early stage opportunities that have the potential for not just a 20% gain, but 2, 3, 4, 5x and more. So those are the ones I'm kind of focused on now. I'm paying attention to silver. I just don't see a lot there right now that compels me to want to jump in.
Yeah, I'm kind of similar. I'm looking at gold, but I'm tending to be a little bit more silver focused, because I see in the silver market, I think that the metal itself could take a 2 or 3 times um, price rise from its point from now to when it starts to top out. And if that's the case, the exponential value of those silver companies would be even greater. Where gold, you might be looking at, a 25 to 40% increase. Yeah, you're still going to get, that exponential growth, but not to the same extent. So, my strategy's been kind of looking more for home runs and doubles. But with that
Yeah.
said, there's a common denominator very similar to what you're looking at. I'm looking for kind of projects that have put new eyes on old projects,
Mm,
to see if they've got a different way of looking at things that can make something old new again. And
hmm.
I'm finding a few of those, in both the gold and the silver markets, where it's something that's kind of got put on somebody else's back burner, completely forgotten about, and somebody's come in, and they put new eyes on it, and they're going to push their thesis forward, and we'll see where it goes, because you'll have some of the greatest stories, like Great Bear as an example. That was a prime example of somebody in a down market took an unloved project, put new eyes and new thoughts behind it, and hit a grand slam.
Yeah, and a big grand slam at that. Yeah. Yeah, that's a good point. I think that's definitely a strategy to look at, especially when you think, if a project hasn't been drilled since the 70s or 80s, and you can find those out there because the 90s we went into gold went into a bear market. So if they haven't been drilled in 30, 40, or 50 years, heck yeah, we have a lot more modern techniques today, a lot of more modern methods. Our understanding is more advanced. And yeah, getting those fresh eyes on something, that's a very valid strategy. I like that and I use it myself. So, and that's definitely possible right now with everything beaten up.
Yeah, and the one positive with everything, being down like this, there's very few, as Rick Rule refers to them, as moose pasture deals out there, where someone's got a giant field with rocks on it and said there might be something here.
Yeah.
Um, those deals aren't there, because there are some deals out there that just simply can't get funded right now, and there's nothing wrong with the project. It's just the market at this point. So if they're having a hard time, moose pastures are definitely not getting funded, and no one's gonna try that particular play. That comes at a market high, not at a market
Yeah,
low.
I mean, there's projects out there that are decent that are having a hard time getting funded even. So, um, it's sad, but it's true. If you don't have the two C's, cash and catalyst, you're not gonna see an advancement of a property, and certainly not an advancement of the stock. So they have to have not just the opportunity, but they have to have the cash to carry it out.
Yeah, no, that's very true, and that's also another factor that I do put into looking at some of these projects as well, is that they got to have the cash and the catalyst, because when we do come out of this, those are going to be the first movers.
Yeah, that's where, and I've said this before, that's where you're gonna see easy money being made. You know, you're gonna see doubles and triples just coming out of that, just because all of a sudden they're finally getting some more attention, the attention that they deserve. And so we're gonna see some easy money being made in some of these stocks when the market does turn.
Yeah, and we don't actually have to look too far to see where some of those types of deals lie. If you take a look, to the uranium market, there was a marketplace that was beat up and pummeled and forgotten about for almost 2 decades, since Fukushima, and now there's catalysts to the point where there's not enough uranium to satisfy the current contracts, and mines are coming back online. And not only is the uranium price up dramatically, fivefold this year, but it's taking and bringing the miners along with it.
It really is. Yeah. In fact, some of them have run so much that we took profits, last month sometime. We're still holding on to everything, but we took profits because some of them had run up so much. But there will be more opportunities there, definitely for us investors, at all different levels, simply because there's a supply demand issue. You have politicians uh, doing a 180 and now supporting it instead of being against it. You have the green energy initiatives that are everybody's getting behind, including most of the environmentalists. So this is a bull market that's going to run for, a fairly long time.
The one thing about the uranium market, Jeff, though, is that the price has run the way it has, and it hasn't even taken into account the demand for the SMRs yet. And I think once those start to pop up online, the uranium demand and the demand for the uranium stocks is going to take off like it's on steroids.
All of us in the industry are aware of it. I mean, you can't go almost a week without seeing another SMR that somebody wants to initiate or is initiating or plan for or whatever the case may be. And I don't think a lot of, mainstream Wall Street types are really much aware of that other than analysts in the industry. And that's just going to add on top of the already insatiable demand. So, that's a real factor, and it's going to have real implications as this bull market unfolds.
From a speculator point, what I like about it is it's flying under everybody's radar from a retail standpoint. So, once everyone starts talking about these reactors coming online, the retail investor is going to jump in, and the uranium market is way smaller even than the gold and the silver markets are. So you get an elephant jumping into a kiddie pool, and then what happens.
That's right. That's a good analogy, right? And that's all still ahead, even though things have run up a lot, and there will be, pullbacks along the way, of course. But a lot of that hasn't even played out yet. That's the crazy thing about this. So this will definitely be a multi-year bull market.
Yeah, no, definitely. Um, I've been kind of shying away from the critical metals, though. I don't think that they're going to make much of a move until after a recession gets priced into the markets. What's your thought on the critical metals?
Yeah, I mean, it depends on which country, right? If they declare them a critical metal or not. Uh, some have silver, some don't. Some have copper, some don't. Um, I do like lithium, I will say that. Nickel, I'm not as favorable on. Um, and then the other rare earths and things like that. So I think I'm still primarily focused on gold, copper, lithium, and I'm definitely keeping my eyes open for silver.
Yeah, yeah, I'm pretty much, yeah, it's pretty much the same boat. I might rethink some of my positions on that. As I say, if we figure out whether or not we got a hard landing, soft landings, the Fed going to pivot, who's going to be in the White House, you know, on and on and
Right.
on. There's a whole lot of other factors, and at the end of the day, they're all industrial metals. So, they're going to be economically more driven than the precious metals market is.
Right, right. It does depend on what how the economy progresses. It does depend on the Fed, even though, like I said, I hate that. And it does depend on investors, what mainstream and Wall Street think and how they view things. Um, and there'll be some supply demand issues that crop up in all this. Government subsidies. Yeah, there's so much that could play into this. I like being in the metals market right now, even though it's depressed, even though the junior sediment is, historic poor levels. This is the time to get long now. At least that's how I'm viewing it. I want to make sure I have the exposure I want before these things make a move and they double before anybody wakes up. You know what I mean? So that's kind of how I view it right now.
Yeah, but you got to have the stomach and the fortitude for it because it could
You
skip
do.
along this bottom for quite a while.
Yeah, we have. Although there have been stocks that have done very well, so you have to look at them individually and not just, buy, GDX or something. I mean, someone can do that, but until sediment changes, that's not really going to move that much. but there are stocks that have done doubles and triples and 10x, even for me last year. So it can happen if you really get picky.
Yeah, no, and it's definitely a stock picker's market. But I agree with you. Like, I sit there and go, yeah, we got to rely on the Fed and we got to rely on the government. And I'm having to rely on like the two most irreliable things that I could possibly have to rely on. I don't like it much either. So, Toronto's coming up. Are you going to be speaking at the Metals Investor Forum in Toronto?
Yeah, I'm excited. I'll be speaking there as well. So I'm looking forward to that one. So if anybody will be there, please feel free to introduce yourself. I've got my talk ready. I've got to refine it a little bit, but I'm going to focus on, why I think we're still going to be winners in this market. Believe it or not, it's maybe a bold thing to say, given the state of the market, but I do think we will come out on top if we, stay in the market, focus on best of best, and you're going to have to dump some losers too, by the way. So there's some that just aren't going to make it or aren't going to come back. So, but I think if you do that combination of things, when this does turn, we can be very happy.
Yeah. Do you know which of the 2 days you're talking?
I think it's the first day. So my flight is Thursday, the day before. And at the January MIF, there was a bunch of snow in Vancouver, as those people know. And my flight got canceled. So I missed the whole first day. So I'm, fingers crossed that doesn't happen for the Toronto MIF, which is, just as likely, if not more likely, right? But I speak the first day and I don't fly into the night before. So hopefully the flight gets me there.
Well, hopefully. If people want to follow your work, how would they do so?
Oh, it's pretty simple. It's at the Gold Advisor, thegoldatvisor.com, and you'll see lots of things there. There's a free portfolio if you want to create some login credentials. I have my book there for sale. And then also a new paid letter called the Prospector, named after the book. And that's where we're reaching down into more early stage opportunities for potentially a bigger bang. So lots of free resources there, though. So I encourage people to check it out.
Perfect. I will also add the link to the Metals Investor Forum in Toronto. So if people are in the Toronto area, you could come see Peter speak in March 1st and 2nd at the Delta Lower Simcoe Street. So it's down by the hockey arena. So look forward to seeing you in Toronto, and here's to a successful Toronto run to be as good as the Vancouver run was.
Yeah, great. Thanks, Michael. I think it will be. This is going to be fun. So I look forward to seeing you there.
You bet. Thanks, Jeff. The Prospector News podcast is for educational purposes only. The opinions expressed are those of the participants and are not to be taken as investment advice. Listeners need to do their own due diligence and seek advice of a licensed investment advisor.